All right, so just continuing the downtrend. So it's important to understand all the stuff over here. I don't want to summarize the whole thing, but there's some key points. So a question comes to mind. When the hell would you buy, right? If you have an uptrend, when would you buy? That's a critical question. And let's just say this question depends on your style of trading. A lot of people, they cannot buy pullbacks for whatever reason, and because they're breakout driven, just a personality thing. But for the pullback traders, where would you buy? So obviously you buy the pullbacks, but what are the key characteristics of a pullback that you're looking for to buy? Well, let's just take a look at the buy points. This is where Wyckoff says buy. This is one pullback where he says buy. Why are you buying? Why are you buying this pullback? Why? Because the background makes sense. In terms of what? In terms of you have follow through, you have a climax, change of behavior, pullback, and then evidence that supply is diminishing. What is that evidence? That evidence is the clustered closes. What is clustered closes? Clustered closes is a lack of progress, lack of net change. So you see that from close to close to close, there's almost zero net change. There's very, very little. That is evidence that selling pressure has evaporated. Why? Close to close to close is done. All right. Second, so that's telling you selling pressure. So does it mean that you're just looking at close to close to close? No, that's just one evidence. Second evidence is waning volume or tapering volume or volume that's decreasing. That is the second evidence. Third is the shortening of the thrust from here to here to here. That's the third evidence. All that together makes the picture. What picture? That supply is diminishing. Okay. But then the other thing that he doesn't mention here, but he mentioned it in other places, is this abrupt volume. Why is it abrupt? This abrupt volume came as it was, as the pullback was completing, all of a sudden, bang. And that's the biggest volume in 1, 2, 3, 4, 5, 6, 7. 7 bars. So what's all that volume doing here? What it means is demand's come in. That's what it means. So this is the concept of a minor climax, means demand has come in. It is also a form of accumulation. How do you know it's a form of accumulation? Well, what do you think all this volume is? Buying. What are they buying? Whatever others are selling. So buying, that's what the volume is. That it's transacted and gone into strong hands. So that's why you buy. Other thing here, he also mentions a buy here. Again, this is another example of a pullback. So you have two examples here of a pullback. By pullback, I mean there's some type of rally and then there's a pullback, right? So the first example is based on the closes and the volume and the shortening of the thrust. Oh, shit. What about them? They show you that there's net change has very little and tapering volume and all of that. Okay, fine. Oh, one more thing. In a broad zone of support, meaning there's a lot of bars. Okay, they're making a zone of support here. Okay, so it's like an ABC correction. It's going down, It's not just one straight pullback down. It creates a zone of demand. So that's something just to keep in the back of the mind. So the second pullback buy is right here. Why does he say buy this? It's very important to understand why he says buy this pullback. What does he say? I forgot the details, but I'll get the main factors. All you really need to know. The first thing is on the pullback, you have a high-end close. All right, so it's pulling down. You have a high-end close. The high-end close is evidence of buying. All right. Second is you have a minor climax. That abrupt volume, which is the biggest in 1, 2, 3, 4 bars, on the way down as it's pulling back, followed by this bar telling you that it's about to that the move is about to resume. So again, you have two examples of buying pullbacks. One based on closes that show zero net change or very little net change, along with the volume, shorting the thrust, etc., 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 and zone of support. Second is the climax. But really, you have a climax here, a minor climax here, meaning abrupt volume here, and you have abrupt volume here. Okay? The other indications that help you, or supporting indications that help you, is the high-end close, which occurred here. The key or supporting indication here was the lack of net change. All right? Here, it's the high-end close that's telling you move's about to go long. Go long, put the stop under, and wait it out. The other thing he mentions is other type of supporting evidence. What? Higher high, higher low, and low volume. Low volume on the attempt down is telling you that there's nothing left. You know, there's not a lot left, or they don't like this level. They're not going to trade off of it. Meaning on the downside, the supply has dwindled. All right. Then it goes down, and then it goes and rallies. So again, buy one, buy two. All right. So I just wanted to mention that because a lot of times, you know, figuring out, oh, what do I look for on the pullback? So it's all mentioned here. Before I continue, I want to really emphasize this point because this study is the most important study, in my opinion, in the Wyckoff course. And it really needs to be understood in a deep way, because all the behaviors here, I don't want to say it's all you need, but a lot of times it's like everything is here, you know. Anyway, so and I'll just again harp on it. These are the three indications to buy, all right? When the market gave indications of completing a selling climax at the same time as shown by the entry of our vertical chart for that day, was able to rally vigorously on increasing volume. What is he saying? You got a selling climax, and the rally on vigorous volume and increasing volume is the change of behavior. Climax plus change of behavior. Bullish change of behavior. Where does that occur? It occurs right here. All right, it climaxes. Where's the climax? On this bar. See that high volume? Followed by a change of behavior over here, which is even higher volume. All right, so December 17, when it indicates completing the climax, selling climax, and then rallies vigorously on increasing volume, which is a bullish change of behavior, aka a sign of strength. All right, first time, as you know, change of behavior is like the first time heavy selling volume or heavy buying volume comes in. All right, and it rallies vigorously. All right, so I'm done with this. So he's ready to buy lows, and that's how he does it. How does Wyckoff buy lows? This is a good question. He buys lows by looking at climaxes followed by a change of behavior. Why? Because panic selling meets professional buying. Panic selling is the climax. Professional buying is the sign of strength or the change of behavior. When you see, what is it? Professional buying meeting panic selling, he gets in. Next opportunity is when it completes 3 days low support, but the closing prices on each of these days are between 140 and 141, showing the selling pressures losing force, and the net result of 3 days of pulling and hauling is to leave the average almost unchanged. All right, following a considerable reaction. All he's saying, you got to pull back. You got to pull back right here. And in 3 days, what's the damage? What's the selling damage? Zilch, or very, very little, or not enough, or so small that it indicates that 3 days of trying to go down, it's not going down. All right, so he's ready to buy there, and that is the springboard. Very important concept. I'll return to it later. All right, and then he says, oh yeah, you know, there's no net change in 3 days, or very little net change. At the same time, low volume. So it's not just closes, it's also the volume. A lot of folks will say, oh, I just need to use price. Price is king. Price is what matters. Yeah, but so does volume. And how do you know it matters? Because over here, if you look at price, you're going to miss this volume spike here. That volume spike is demand coming in. You miss that. What are you going off on? Just 3 bars? You know, so you need that abrupt volume. It's telling you this dude or some dude is buying, right? So that low volume on the pullback compared with the volume of the mid-December decline. Mid-December decline is what? This is the high volume. So imagine wave volume, all right? So you got this big ass wave down, and it has a lot of volume, right? Then it rallies, and then it tests. This pullback here has less volume. Understand the concept. Climactic down, like maybe I'll illustrate this. 1 second. So here, the mid-December decline compared with the volume, all right? Okay, at the same time, low volume on the reaction from the high compared to the volume of the mid-December decline. What does that mean? All right, let me show you what that means. You got this shit going down, and then this, okay? Now understand, here, if you were looking at the wave volume, it would be... it would be like a wave going up like that. All right, wave volume. When it tests here, it would be like that. All right, and that's, you know, if you don't have up down volume, it's just like this. So let me try again. So if you use up down volume, it's gonna look like this. There'll be some volume here, and then there'll be this. So let's just quantify it. Let's say this down volume is 1,000 contracts. All right, what's here? Let's just say it's 450. This is for you guys that use wave volume, okay? Because this is the only way you're going to be able to compare the declines. Is really either you have to do it visually, or if you want to quantify it, it's going to require wave volume. So here is an example of when he's looking at this and saying, at the same time, low volume on the reaction from the December 18 decline. How are you going to measure that? You have to use wave volume or just look visually. Compared with the volume of the mid-December decline, confirms the inference that selling pressure is losing force. What does that mean? It means you got 1,000 on the way down and then 450 on the test. What does that mean? That means here, right here, that's 1,000. Meaning if you add up all the volume on all the bars, you see it going up. It's a lot of volume. Then when it goes down, it's a much less volume, right? So what 2 pieces of information does he mention here to see? Our next buying opportunity when the market completes 3 days of lower support, but the closes, that's the first piece, for those 3 days show no selling pressure. So when you're looking at a daily chart or weekly chart, look at the amount of progress that are made on multiple bars. If that progress is shit, that means selling pressure has gone down. But the second piece of information you want to see is it has less volume on the wave down than the prior wave down. You can see that visually, or you can see that using wave volume. Okay? So a lot of folks, and why I'm harping on this is a lot of folks, they're obsessed with looking at for a change of behavior or climax or whatever. They don't realize that you can have, for example, this, and the volume on the volume pane, on the wave volume, is going to show this, and maybe it goes down, and then this. What is it showing? It's showing that the volume is decreasing. This matters. This matters. This is like saying the climax and the test. The climax and the secondary test or whatever. This matters. All right, and in the example that you see here, my cat is all over this. Down. In this example, what you have is basically something like this. All right, now that's like the price, the waves, pain, and then the wave volume. You have boom, 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 bang, it goes up, and then bang, goes down. What do you know that concept of divergence? I don't want to use that, but over here, pretend like this is 1,000 contracts, or in this case, 10 million shares, and this is like 450. It shows that the test, when it pulls back, has diminished. That's critical information. All right, it means that the volume from the mid-December decline to the prior beginning of December decline has decreased. So this is what he's talking about. All right. So when he says two pieces of information on the daily chart from the last three closes, from close to close to close, there's no progress. Second, at the same time, lower volume on the reaction from the December 18th high compared with the volume from the mid-December decline. This has to be in waves, right? It has to be in waves because he's looking at entire declines, not individual bars. So that confirms the inference that selling pressure is losing its force. Buying power is overcoming it, as it appears that the market has completed a secondary reaction. Why? Because the secondary test has lower volume, which has the effect of broadening the zone of support around the 136 and 140 level to sustain a proportionate, more substantial advance than the first recovery. We either buy in this reaction if we missed our first opportunity or add to our holdings with stops on the new positions. As before, the danger point is the lows of whatever, the market on the springboard. So that's the second place. Again, don't overcomplicate it. Just realize that this piece here, the closes don't make progress and there's less volume and it creates a zone of support. All right, that's a zone. All right, so third is a breakout. We don't buy breakouts. Some people do, but I mean, he was ready to buy the breakout. But obviously, you can always buy a pullback. Why would you want to buy a breakout and have all that risk? I mean, unless it's like momentum or breakout on a weekly and you're entering on an hourly chart or something like that. All right. Now, what I want to do is focus in on this piece right here to show you what he says about buying this piece. All right, so what does he says? What are the indications? The reaction begins on the 12th. Where is the 12th? 12th is here. And it goes down and down and down. And volume on the reaction diminishes comparably with volume on the rise. All he's saying is, again, it's a low volume pullback. Pullback has low volume. So volume on the reaction is less, first indication, which is a bullish indication. All right, what else? It's a high-end close. Where? Right there on this bar. That's a high-end close. Another bullish indication. close is nearly at the high point of the day, a bullish indication. This is our first sign that the reaction is over. So what's the first sign? High and close. So here we now have a buying opportunity. These are not my words, this is his. He is looking for a buy opportunity based on what? Based on a pullback where you have a high and close, and that pullback has lower volume than its rally. That's what he's saying here. All right. Further confirmation of this comes from higher support on the 17th. Higher support really means higher low. Where's the higher low bar? Right there. That's the bar. The higher low is a further confirmation. So now we go from bullish indications to confirmations. The bullish indication means what? The pullback on low volume and the high end close. What is the confirmation? The higher support bar that came right after it. And then finally, further confirmation comes from this dip. This dip, further confirmation comes in higher support on the 17th and in an almost complete drying up on volume to the same level as the 19th. Where is this? Basically, he just said volume dips. All right, so you're looking for that small volume. The close price of 15, 16, 17, 19 show a support within a narrow zone, mostly around 147, 148. 147, 148. It's very important because the second time he mentioned that zone of support. So he's really looking at those closes. He's really looking at the net change of those closes. He's not looking at just as green bar or red bar. He's looking at the amount of damage the closes show, because they show the net progress. All right, so that's a buy point. All right. So again, let me kind of sum it up. The market is going down. That right there is your climax. On a smaller time frame, it would be a climax, or over here would be called a minor climax, where you have abrupt volume. So that's first piece of evidence. Second piece of evidence is your high and close bar. That's the evidence that continuation that is going to occur. He's ready to buy it right there. Third piece of bullish evidence is the higher low. That higher low occurs as volume is gone. There's no volume here. You see, it's very low volume. So that is telling you that bullish. All right, and he even calls it a confirmation. Fourth, it dips down. There's not a lot of volume that comes out, and that's it. Oh, and all these closes are in a narrow zone of support. It's also what you want to see. You want to see that the closes are a narrow zone of support. This concept is similar to shortening of the thrust. In that shortening of the thrust, you're looking at bar to bar to bar, the high to high to high, and seeing if it's small. It's getting smaller. From high to the next high to the next high, it's getting smaller. Or from low to low to low, it's getting smaller. That's a shortening of the thrust. Now, similarly, how do you see that similar thing, that similar observation in closes? You see it in that the distance from one close to the next close is very little, and it is a sign of net progress. When those closes from one close to the next close, to the next close, to the next close are small, they're setting up a zone of support. You know, even here, like, I mean, I could use the same example over here. You have this close and close and close, they're in the same area. That is setting up something also. It means there's no net progress. There's no net progress that's going to set up a zone of resistance. I mean, he doesn't say that in terms of resistance, but the idea is that the buyers are getting tired and fatigued and they're not taking it higher. So what do you combine that observation with? You combine that observation with volume to see if volume is tapering off. Okay, showing that the less enthusiasm for buyers. And then finally, you just look for it to terminate through some type of climax. Where the climax is, every single time there's a climax. Here you have a climax. Here you have climax. Here you have a climax. Here you have a climax. Here it looks climactic and then it hesitates. Here this looks climactic, but it's not ready to break. Why? Because of this thing right here shows lack of volume. So they were ready to go higher. But what it did, he did say that there was initial distribution here. And then finally you had your climax here. Almost every single rally and pullback, he identifies the climaxes. This is why it's such an important behavior. Okay, almost every single one here, he mentions climaxes. And then over here, I think over here he mentions a climax, and that set up a minor bounce. I don't know if he mentioned it here, I don't remember, but certainly he mentioned, I think here, one of these he mentioned. I'm not sure if it was this one or this one. This one is, I think this one, because the volume expands when it goes into that resistance, holds and reverses. Well, one of them he mentioned, so I'll eventually get to them. But the point is, at the turning points, Wyckoff is almost always looking for certain things. What are those things? What are those behaviors? From the perspective of bars, he's looking from high to high and low to low. That is from the perspective of the thrust. Second thing he's looking for, from the perspective of the close, he's looking for the distance between the closes, and that is an evidence of net progress. The third thing that he's looking for, oh, by the way, when the close is also giving you a zone of support or resistance. The other thing that he's looking for is tapering volume that is tapering off. And is it increasing or decreasing? When it's increasing, he's looking for abrupt volume to terminate the move. When it's decreasing on the pullbacks, he's looking for a continuation. What else is he looking for in terms of bars? He's looking for high-end closes. So all these observations he's putting together. Other thing is he is looking at wave volume in terms of comparing the volume on the pullbacks to prior waves. He's looking at that, and that evidence is whatever I went over when he's comparing this decline to this decline. So you see all of these observations coming together with him. It's just that he doesn't teach them in that in a curriculum-like way. What he's doing is just applying, and that's why a lot of people, including myself, have to break it down and kind of reverse engineer the observations that he's making. But once you get it, it's really quite logical, because a bar only has high-low close. So obviously on a rally, you're going to be comparing high to high or high. You're always comparing the closes. And from a perspective of volume, it's either high or low or not. And then from the perspective of waves, you're seeing if it's tapering off and comparing the wave to the prior wave to seeing if that is less or more. And closes, whether they're high end or low end, stuff like that. So the data is there. Just the routine, the mental routine of picking it up is what needs to be trained, and that's what he's calling judgment. Anyway, done with this. So now what I wanted to do was continue. I'll do it in the next video, is continue on the decline and see, you know, see how he's taking short positions and all of that. Thanks.